My name is Claire Roberts.
And I'm Brianda Robinson.
I am doing the ADR portion of this project on ASICS.
And I'm doing the MNC portion of this project on Under Armour.
An ADR is a foreign stock traded on a U.S. stock exchange and represents ownership of a foreign stock. ASICS hasn't released its 2018 annual report, so we will be using 2017 data. ASICS is a sportswear company located in Japan, and its functional and reporting currency is in the Japanese yen. It is the parent company of ASICS Tiger and Onitsuka Tiger, and its brand presence has weakened because people have chosen fashion over function. Good news is the Chinese government has implemented a Sports for All campaign, which will increase the sale of sportswear in general.
Under Armour is an American-based sportswear company. It has multiple style and design options for products for everyone. The marketing goal is to seek to drive consumer demand by building brand equity and awareness that Under Armour's products deliver advantages to help athletes perform better. Under Armour is the official supplier of footwear and gloves for the NFL. It is the official supplier of footwear for the Major League Baseball, and it is also a partner with the NBA. Starting in 2019, Under Armour will be the official apparel partner for the Major League Baseball.
ASICS implemented a 5-year growth plan in 2015. In 2017, they revisited their goals and they had not reached their quantitative targets. In net sales, the 2020 initial plan was to have 750 billion or more. In 2017, they had only 400.1 billion, so they then revised the plan to 500 billion. Hello. The operating income ratio in the initial 2020 plan was to be 10% or more. The 2017 result was 4.9%, so they then revised it to 7% or more. The ROE in the initial plan was 15% or more. The 2017 result was 6.5%, so the revised plan was then 10%.
Under Armour stayed relatively low on their daily returns, averaging about negative 0.217%. As you can see, they are not as volatile as the S&P 500. The S&P 500 was very volatile, with a daily stock return averaging 0.066%. The first spike affected everyone in the sportswear industry, and especially affected Under Armour. At the same time, the S&P 500 was barely affected by this. The second spike caused Under Armour to lose 24% of their shares, and it was a new multi-year low. At the end of the year, Under Armour had a loss of returns of 45%, while the S&P 500 only had a gain of 22%. Even though they did have a gain, it still was the worst year since the 2008 recession.
This is ASICS daily returns versus the Nikkei 225 returns. ASICS daily returns over 2017 averaged a negative 0.09%. On May 8th, ASICS released business results for the first quarter, and it showed bad signs of recovery, causing the stock price to plummet more than 10% the next day. The Nikkei 225 daily stock price increased an average of 0.07%, and the Nikkei 225 closed for a record-breaking 16th straight session while leading up to and following the October 22nd election of a new prime minister. Other factors that increases the value of the Nikkei was the strength in the US stock market, the depreciation of the yen, and the overall upturn in both the global and the domestic economy. As you can see, overall, both the ASICs and the Nikkei were quite volatile over 2017.
Under Armour has facilities and offices in America, Amsterdam, the Netherlands, Panama, Shanghai, China, Copenhagen, Denmark, Brazil, Canada, Chile, and Mexico. Because of this, Under Armour is exposed to the euro, the Panamanian balboa, the Chilean peso, the Canadian dollar, the Mexican peso relative to the euro, the Chinese yuan, the Danish krone, the Brazilian real, and the Japanese yen. Approximately 21.7% of the Under Armour revenue comes from its international business. In all regions, Under Armour has a long position because they have more money coming in than they do going out. The European, Middle East, and African region has a $469,997 revenue. The Asian Pacific region has a $433,647 revenue, and the Latin American region has $181,384 in revenue.
ASICS has increased its sales worldwide, expanding its currency exposure. It has physical flagship stores in London, Tokyo, Shanghai, and New York. It has a shoe development facility in Boston, and it is developing e-commerce in Sweden. All the currencies ASICS is exposed to are the Japanese yen, the Taiwanese dollar, the United States dollar, the euro, the South Korean won, the Swedish krona, the Australian dollar, the Hong Kong dollar, and the Chinese yuan. The operating income was then divided into regions, with the Japanese region being the highest at 5,886 million yen, the American region at 2,361 million yen, the European region at 8,297 million yen, the Oceania, Southeast, and South Asian region at 4,057 million yen, the East Asian region at 5,097 million yen, and other businesses at a negative 253 million yen. All the positions were long.
This is Under Armour's correlation table. It is the correlation table shows how all of the foreign currencies and the index compares to Under Armour. It had a strong negative correlation with the euro at negative 0.11751711. Because of this, whenever the euro is appreciating, Under Armour's return is depreciating and vice versa. It had a strong positive correlation with the Mexican peso relative to the euro at 0.0999. Because of this, whenever the Mexican peso relative to the euro is appreciating, so is Under Armour's return. The weakest correlation was with the Brazilian real at 0.0341453. And because of this, whenever it doesn't matter whether the Brazilian real is doing good or bad, it doesn't have any effect on Under Armour.
This is ASIC's correlation table compared to all of its relative indices and all of the currencies it is exposed to. ASICS is the least correlated to the Australian dollar with a correlation of negative 0.000132, and it is most correlated to the Swedish krona with a correlation of 0.076107.
The hedging program for Under Armour As a result of future business requirements, market conditions, and other factors, Under Armour may elect to enter into interest rate swap contracts to reduce the interest rate risk. Interest rate swap contracts are accounted for as cash flow hedges, and as Under Armour expands its international business, Under Armour is anticipating expanding its hedging program as well.
The derivatives that ASICS uses to hedge and to reduce foreign exchange risk are forward contracts, and they generally look back at past experiences to decide if it will use the same tactic again and the probability of the transaction occurring in the future. To determine the success of interest rate swaps and currency options, they compare change in net cash flows. And to further reduce risk, they check their financial institutions and main customers' credit.